Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the macro view. Specifically, we'll be taking a look at the weekly position and the weekly close numbers for this week. As I get into the video, if you find it useful and informative, smash the like button. Do appreciate that. If you are new to the channel, then why not consider subscribing, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's get right down into this one, right? So I think the main thing that we really need to talk about is going to be this. This is going to spend, we're going to spend a little bit of time talking about the Gaussian channel. Last week we closed inside the Gaussian channel, which will be the first time for this bearish market, so could signal reversal, right? So I'm going to talk a little bit around what the Gaussian channel historically has kind of shown us and where the Gaussian channel is right now. This, for the most part, many people, let me actually go ahead and just get rid of the stocks. We don't need those right now. If we take a look at this, we can see that we had this bear market bottom just over here. We had this bear market bottom over here. And a lot of people are thinking that this is the bear market bottom over here as well. Okay, and so we can kind of see that we have these red areas within our Gaussian channel. And essentially, this is where you should be buying, right? When the Gaussian channel is red, this is like DCA territory. That's kind of the idea here. This is basically well below average. It's three average lines and you're well below them all, right? And therefore these three areas, had you dollar cost averaged in those areas, you should have done incredibly well, at least in the previous two cycles, right? That's kind of where the Gaussian channel is incredibly interesting. Now, if we think about these lows, then we have to consider, you know, what's actually occurring during them. Okay, so let's just focus in on this one because I have data readily available into my hands that I can kind of talk about this one. I do not have certain amounts of data for this because it was very early on in the stages. So we're going to reference this one. This and this from a Gaussian channel point of view were very, very similar. For example, the weekly close inside the Gaussian channel led us down into a bear market. A weekly close position led us down into the bear market. A weekly close position inside the Gaussian channel led us out. Same over here, led us out, right? Now, in 2021, it was the end of 2021, we closed a candle inside this Gaussian channel, and then the very next week we closed it above. That's the first time in Bitcoin's history we had seen that on the Gaussian channel. It still led us down into the bear market, so we can argue that when we see a close inside this Gaussian channel, it signals us moving down into the bearish market. But it did obviously have this anomaly that had never been seen in the before in Bitcoin's history, right? So we have to consider what that might mean. It might mean that it doesn't generally matter. I mean, at the moment, we only have 3 data points to say that when we close inside, it leads us down into a bear market, but it might just be a coincidence that we have these things occurring, okay? So we're going to take it with a pinch of salt, mainly because that one candle there does kind of void the idea that when we close inside it, we're done for a bullish market and we go down. Likewise in reverse, okay, so at the moment we've closed inside it. This is a good positive. It's very much aligned to what was going on previously over here. However, I think it's important that we also understand what's actually driving price up and what's driving us out of this bearish market into the potential highs, right? As a lot of people want the bull market to be here, myself included. So that's kind of the point of this video. Are we going to be closing inside the Gaussian channel again? I would say we probably are. And does that mean that we are going to be seeing you know, price action moving us up significantly from here? Is it all up from here and no more downside and all that kind of stuff? So at the moment, the low on the Gaussian channel, the low line, is 22,657 USD. Okay, so we know that there's a 22K, 22.5K kind of threshold kind of being inside the Gaussian channel. Now, history says that we should never come out of this Gaussian channel again. However, I think we have to. And therefore, that means that this whole theory of the Gaussian channel closing inside it and all that kind of stuff, not actually meaning what it is. But let me go into some data. And like I said, I'm going to talk specifically about this. Okay, so over here, we had our... I'm just going to turn this up a little bit on the styling side of things. It's practically invisible. There we go. So we have this line here, right? It's December 2018. This is basically where we started to see a bit of a reversal, but it didn't really start ramping up until we kind of got to around March. I'd say probably late February, beginning of March. You can kind of see we start to have a huge uptick then in April, and we really start to ramp on up here, right? So one of the things that we have to kind of consider when we start to see reversals in the market, okay, these reversals are either going to be at the top end or at the bottom end, you're going to see something that would have occurred from the fundamental basics, which is someone's buying and someone is selling, right? So up this higher end here in the 2017 bullish market, we know that there were a significant number of people selling into the pump to the upside, and it was retail investors that were left holding their bags by the time it got to the top. That purchasing power from retail investors got exhausted up here, and price starts to reverse down. And with no big funds coming back in to save the day, we come down into the bearish market. Okay, now at the low end of things, we see the opposite. We can see that it wasn't until we got into these lows that retail investors were starting to succumb to the selling pressure, and big investors started to come in and buy up that kind of fear, and that takes us out of the bearish market and into the bullish market. So let me go ahead and show you what this looks like, okay, because I think it's important to visualize it as well as me verbally talk about it. As I said, right, we have our low in December 2018, and we can see up here it didn't really start kicking off until March 2019. Okay, so if I bring up our data for our whale wallets, what's happening during this time period? Well, we can see just over here, and I can hover on this and get the dates up so you can kind of see that we have this flat period of orange. The orange line is the price, by the way, guys. So you can see this flat period of trading activity, prices going sideways. During this moment, this is where the retail investors are selling, but also where the whale investors are buying. Okay, and you can see that the bear market low comes in down here in December, and they've kind of bought up a lot of the fear from the retail investors. Then the whale investors are not really terribly doing too much in January. They're not really doing too much in February, and then they get into late February, beginning of March, and then you start to really see these guys investing and starting to really build their positions as they go into April. So as we start thinking about that, we can then start to reflect on, okay, well, we can see down here that this move to the downside was basically accumulation from the whales, okay, and we can see that down here they start to buy up, okay, and they start to just kind of come in, yeah, around here. Actually, we're on this set of green candles just at the bottom, and then they came and take us out. If it wasn't for the large institutional level investors, could we have actually rallied up and seen these institutional candles push us up and to this high up here? Probably not. So it's important that we reflect on that. So if we know that whale investors were selling on the way up here, and they were buying all the way down here, okay, so they're sold into the pump, and then they start accumulating down here, and it's because their accumulation that they take the price up higher, then that's kind of going to be one of the tells that we're looking for over this side, right? Logically thinking, we need to kind of marry up with the idea that, okay, who's buying, who's taking our this price up into this Gaussian channel, because, you know, that's kind of was driven from large institutional investors prior, right, after shaking out all the retail investors. And it is the institutional investors with the money, right? You got to follow the money, essentially. That's why these things are spoken about. So if we start thinking about this, we know that there were a significant number of sellers up at the high end here. It actually started more up this end, and this was a little kind of relief rally, work off distribution and all that kind of stuff. Okay, so we know that they were up there, and what we're looking for in a very similar way that we saw over here, right? We know that the accumulation started just beforehand. Okay, so you would assume that if we're to kind of follow the same suit, then there should have been buying activity occurring down here from our institutional investors, right? They got to buy the bottom, right? They're going to buy the fear as price drops down. Likewise, they're selling on the way up to the top, right? So they should be buying on the way down. That's kind of one of the things that we got to look for, right? Are big funds coming in? Is the smart money? Is the institutional level investor coming in? Is the big money coming in, right? And for that, well, we're going to have to come on over back into our data, and we can reflect on, okay, well, what's actually going on. And before we actually get into that, we can obviously just pick out our dates, right? Our bottom was in November, right? We also had at the time another local bottom in June, which was, according to many moon boys across the globe, that was the bottom at the time, right? That was the bottom was in. We're going to the moon in June. No, it wasn't. Okay, black swan event, because no one knew that was coming. There's a hint of sarcasm in there. November 2022, right? That's now the bottom, right? And we've rallied back up into this Gaussian channel. And for all intensive purposes, the Gaussian channel should be a bullish tail, right? But then we take a look at the data of who's buying and who's selling, and we start to reflect on actually how can it possibly be the bottom, and how can this Gaussian channel give us a positive weekly close position when it's not being backed by any institutional fund, right? Or any big money, smart money, or anything like that. And so when we kind of reflect on this, we can see that the bottom over here in June, and we can see that these guys continue to sell, okay, into the pump that preceded. And then we can see that November is over here, and the current bottom is there. And we can also acknowledge that they continue to sell. In fact, they continue to sell all the way into March of 2023. So to kind of reflect on this, right, if we go back to 2018 wallet counts here for these whales, we can see how it's vastly different, right? We can see that the bottom and the Gaussian channels closing positions really tally up with where these guys were institutional investors were getting into their positions and how they were able to drive us up through that Gaussian channel. Whereas at the moment, we don't see that. All we're really seeing is a bunch of retail investors kind of FOMOing in, and that's not sustainable. It acts, retail investors act too emotionally, and that instability and the inability to deploy as many funds as you could see with smart money, it becomes quite a delicate market. It becomes very fragile, and it will overreact quite badly. And now in 2018, you can also see a vastly different kind of scenario from the retail investors. And I think we're somewhere on this journey with retail at the moment. You can see obviously that they do start coming to the selling pressure during this flat period right here, and they start selling into the actual bottom. Okay, we can kind of see that occurring here. Rather than buying like smart money would, they sell into it like dumb money would, and then they start accumulating at the bottom here, right? Now there's a lot of people that saying, didn't the previous bull market start from retail investors kind of buying? And that's not really the true story. It's, yes, they were buying at that time because they believed that the bottom is in after every major dip, right? But essentially, it's the smart money that was driving that price and able to push it in the direction that that we also want it to. So when we start understanding that where we sit right now doesn't feel very natural, and it isn't really driven from smart money and big funds, and that if you're following the money is leaving the space, not coming into it. Now, we have to consider that maybe, just maybe, retail investors haven't got this one right, as per history. And if history is to repeat itself anywhere, it's going to be that retail investors are wrong, okay? It just doesn't make any logical sense for the market to move up and still see big funds coming out of their positions. It doesn't make sense. So we have to kind of consider that this Gaussian channel is giving us a false flag. The false flag is that it's gone into this Gaussian channel, which is what it had done twice prior, yet the background data doesn't support the idea that we're in a bullish market. Now, I want to be wrong. I don't want us to be in a bear market for a sustained period of time. I would love us to be in a bullish market, and I would love the price to be moving up rapidly to those highs. It's just hard to think that we're going to be able to sustain some form of growth without that big fund really helping push us in that direction. So for the most part, our Gaussian channel right now hovering around that kind of $27,000, $28,000, which is our midline here, I think is yeah, it's going to kind of hit home pretty hard, I think, at some point in the future. So closing position, I don't think we're going to close outside the Gaussian channel this week. I think we will close inside it. So the between 22,657 and 27,999. I don't expect us to push up out of the Gaussian channel, which is currently set at 33,300. So for the most part, I'm not expecting that. Now, in terms of time framing this, we can acknowledge that we've done something that hasn't been done before. Okay, and this is pretty common, unfortunately, in the space. So let me go ahead and throw in these bars here. So what I'm just going to do is going to time out the positions here, just so you can kind of see, because it is important that we reflect on what's occurring. Okay, so if I drop it here, so we can see we had a 413 days, we had 364 days and 378 days. Okay, so we have dragged it out longer than previous, not as long as our 2013 through to 2015, at least not yet. Like I said, my big concern is that this is a big kind of A, B, and C structure that takes us down much deeper, or at worst case, or best case, I guess, is W, X, Y, X, and Z, and we come down a little bit deeper that way. Like I said previously, we've done things vastly different, so I'll take our initial kind of pullback here, throw that onto there, and we'll do the same on this side, the initial pullback from the all-time high to the recent drop, push that over there, and we'll do the same on this one. These fib levels are really key and understanding the psychology behind how people are going to react. So up here in 2015, we went down to the 1.236 and bounced directly from it. Over this side, we stayed between the 1 and the 1.236. We did not exceed the 1.236. And over this side here, we've come down deeper than 1.382 and narrowly avoiding the 1.618. This is vastly different from a psychological point of view. Okay, this one metric alone is incredibly scary, right? If history is to repeat itself, then our fib levels should have repeated themselves. Now, the main thing here is the Elliott wave theory on a C wave structure, right, or the end of a structured move that is just 3 waves, is typically between 1 and 1.236. It doesn't really exceed that. Anything that goes above 1.236 enters into the territory of WXYXZ or an impulsive structure. And we're not in an impulsive structure, so we're either in an overextended Y wave, which is unusual, okay, or we're in a WXYXZ, and that's it, really. Those are the only 2 options. So when we start seeing these, the way that the history cannot repeat itself under this particular scenario, not only have we set up the data to be vastly different, right? And I know a lot of people say it's a 4-year cycle, Bitcoin halving event, and all that kind of BS. These are just things that kind of trip retail investors up, because the halving event used to mean something way back in the day, but is less and less meaningful now. It's more important to focus on the actual current supply than the new supply that is getting created. It really is insignificant these days. So a halving event has less and less importance on the market. So it doesn't surprise me that we've come down deeper on these fib levels, and we're actually starting to rewrite Bitcoin's history here. There isn't a lot of it, and it doesn't make sense that we're in a bullish market right now. We're basically going to be, in my opinion, over the next few months, invalidating the idea that all these indicators in the Bitcoin history charts are going to be predicting the same results as what we saw previously, even though we have new variables. I think essentially the new variables that people are ignoring are critically important, and they're important to understanding the future of Bitcoin. So I'm going to remove all these off, and we can kind of see these. My expectations are we're going to have the longest bear market in Bitcoin history so far. We're also going to be able to put to bed the idea that the Gaussian channel is going to be bullish until we're actually above it and out of it. But we'll see how that kind of plays out. From a smart money concepts point of view, we can see that we are above on the weekly time frame here, the 50 and 200 EMAs. So that looks bullish. And we also have left these 2 imbalances in the order books. These are the concerns that I have, because these are created from institutional level investors. Yet at the same time as we see these, we can also acknowledge that the institutional investors haven't really been back in Bitcoin, which means market makers have been pushing the price to the upside potentially here, the likes of Binance, for example, converting their BUSD and all those kind of things, and lots of other kind of things that are going on in the space. But the market makers are the ones that are going to be benefiting the most from this recent price movement, considering how much trouble they were in November. So when we see that there isn't a lot of accumulation actually occurring at that institutional level, it is incredibly odd to see that these institutional candles had appeared on our weekly chart. Okay, and we can see that this goes all the way back down to $17,000. What's my expectations, guys? Come back down towards $17,000. I said this before and I'll say it again. Where else do you see these fair value gaps on this chart? You don't. Okay, they've all been filled out. So we should acknowledge that these particular areas are highly probable that we're going to have the retracement coming out of that Gaussian channel. Just to even fill this first one, we're going to have to come out of that Gaussian channel. Okay, and now we did see this previously. If I come back, we can see that we did come back down. After we moved out of the Gaussian channel upwards, we came down during the pandemic crash, and we would have filled out any fair value gaps that way. All I'm saying here, guys, is that we have to move back down. We have to fill these gaps out, in my opinion, and we have to see big institutional funds coming into the space before we can see Bitcoin really rallying properly to the upside without the manipulation behind it. But let me know what your thoughts are in the comments below. Are you as bearish as me on crypto right now, or are you thinking it's all sunny roses and we're going to the moon with $1 million Bitcoin in 90 days? Let me know your thoughts in the comments below. I'm going to leave it right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. If you haven't joined us in Discord, check it out, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.